Good morning, and welcome to AI Captain's Briefing for June 23rd, 2026. Today, we are presenting our 24-hour K-Market Bayesian Prediction and Strategy. The core theme for today's session is navigating severe global macro headwinds by leveraging explosive micro-fundamentals unique to the South Korean market. Let's dive into the data. Currently, we are witnessing a textbook structural decoupling regime. On the macro front, we face intense resistance. U.S. 10-year Treasury yields have hit 4.51%, and the U.S. dollar Korean won NDF is flashing red, breaching the 1,530 level. Ordinarily, this triggers foreign capital flight from emerging markets. However, the K-market is proving uniquely insulated. We are seeing a localized bullish divergence dictated entirely by the sheer force of Korean semiconductor fundamentals. Smart money has recognized this and is aggressively executing basis arbitrage in what we identify as phase 3 of this market cycle. To understand this decoupling, global investors must grasp the first K-market peculiarity. The KOSPI is not driven by domestic consumption. It is an export-driven anchor. Looking at the June 1st to 20th data, total South Korean exports hit a record $62 billion. But here is the critical metric. Semiconductor exports surged by an astounding 188%. When memory chips, which make up over 41% of total exports, explode at this rate, mega-cap anchors like SK Hynix act as a gravitational force. They single-handedly lift the broader index, overriding the global macro discount rate. Let's trace today's dynamic chain of capital flow. Step 1. The trigger. The recent Micron and Anthropic alliance, combined with Jefferies forecasting a 40 to 50% memory price hike in Q3, confirms sustained pricing power. Step 2. The primary inflow. Institutional capital is aggressively sweeping SK Hynix, with net buys exceeding 1.2 trillion won. Step 3. The balloon effect. Because mega caps are becoming crowded, we are seeing smart money rotate down the value chain. They are hunting for higher beta in KDOSK front-end and test equipment pure plays. This brings us to the second K-market peculiarity, microstructure, and the divergence between retail and institutional flow. Korean retail investors often exhibit FOMO, herding blindly into familiar megacaps. Yesterday, retail poured massive liquidity into Samsung Electronics common shares, buying the generalized semiconductor narrative, without distinguishing between legacy and high-bandwidth memory products. Conversely, smart money exploited this. Foreign and institutional capital dumped the broad index and Samsung, while aggressively accumulating SK Hynix. This creates a severe decoupling within the exact same sector, presenting a highly lucrative arbitrage opportunity for sophisticated capital. Balancing the scales today requires weighing macro risks against local fundamentals. On the risk side, Bank of America's projection of 3 rate hikes this year, coupled with the FX rate breaking 1,531, presents a legitimate flight risk warning for emerging markets. Yet local fundamentals remain dominant. Despite the currency pressure, the KOSPI night futures closed up 1.87%. The momentum generated by the export data is simply overpowering the discount rate fears in the immediate term. By applying our Bayesian probability model for the next 24 hours, we favor the base scenario at 65% probability. In this scenario, the elevated FX rate caps broad market upside, but SK Hynix and the equipment sector successfully defend the index. We project a KOSPI close of plus 0.8 to plus 1.3%. Please note, this base scenario incorporates a statistical penalty due to the overnight FX threshold breach. For global funds, the ultimate break-even point for directional conviction will be confirmed at the daily close at 15:30 Korea Standard Time. Turning to our actionable sector rotation map, we strongly recommend an overweight position in semiconductor equipment, specifically front-end and test pure plays. However, do not chase the opening gap. Wait for early morning volatility dips. We maintain a neutral to accumulate stance on shipbuilding and defense. Names like HD Korea Shipbuilding offer a safe harbor backed by solid structural backlogs. Conversely, remain underweight on secondary batteries and autos. We see clear signs of capital flight here as the market liquidates these sectors to fund the semiconductor rally. Do not try to catch the falling knife. Finally, let's establish our risk parameters and execution strategy for today's session. Maintain a recommended cash weight of 25%. With the FX rate piercing psychological resistance, a slight cash buffer is vital to absorb macro shocks. Set your intraday hedge ratio at 15%. Monitor foreign futures flow at the open. If it turns negative before 10:30 a.m., activate the hedge. As a final pro tip for navigating the K-market, do not blindly buy the opening gap. Let the initial retail FOMO settle and look to execute your entries during the reevaluation phase around 10 a.m. Watch the NDF FX rate and foreign futures flow at 9 a.m. sharp. They will dictate the day. That concludes our strategic overview for the South Korean market today. We will now open the floor to any questions. Thank you for joining AI Captain.